doing an impromptu little lesson here. It is Sunday night, January 15th. I'm actually in the clinic working tomorrow, a 12-hour day, 13 if you count my lunch hour. So I can't stay up too late here. But I've been playing with some concepts and trying to find ways to simplify things that I've known are true, but have had a hard time implementing as a into a trading program. Things that you can see if you're watching the market live, or if you know how to review a footprint, um, and it'll be somewhat intuitive when it clicks and you understand it, but it is rather complex, and so I'm gonna be using a ton of like jargon, trading jargon, and I'm not gonna stop and um, define everything. Okay, so if you guys are new to the footprint, if you're new to Renko, if you're new to like using trading alerts and indicators, just realize that it's over. This is probably going to be over your head, but you're still going to probably learn something from it if you just kind of try to absorb as much as you can about the process of how I'm explaining to go about like thinking about these things, even if you don't know what all the terms mean and what all the signals mean, and you don't understand an indicator or whatever. Like, don't get hyper focused on that. Just understand the thought process, and that's if you what I would recommend, even if you do know quite a bit about the footprint, is let's like explore this a little bit, and even if you get lost, just stick with it, or at least come back to it and try to see if you can soak in a little bit more. Because, like I said, I don't want people to get frustrated with the speed, but at the same time, there's a lot of folks out there that have a ton of trading knowledge, but don't know how to implement it into a trading plan. Just like I struggled with for a really long time, and so I don't have time, to be completely honest, to explain why things are the way they are, or what the every term means, if it's something that is available elsewhere. If you can define the term with a Google search, I'm just not gonna stop and explain it. So you're welcome to put questions in the chat, but if they're too basic, unless it's some kind of confusion about what I said and not just like, can you tell me what this means? I'm not going to go on a tangent today. I know normally I do, but today we're going to try to stay on topic, because I really do only have maybe 90 minutes tops, and I really wanted to try to get some of this information down into a video. So my contact information, on Twitter, it's at RedBenTrader. If you want to get a hold of me, that's how you find me. If you don't follow me there already, you probably should. And then if you want to learn more about systematic trading, is particularly for futures trading and using the algo that or something similar to the algo that I'm using to trade and have a more consistent win rate, I recommend that you get a hold of my coach. So my trading coach is Simon, and his email is trade, the letter N, the word perform, at gmail.com. You can even ask for a 5-day free pass to the room, which it does cost money on a monthly basis, but you can trade with us for 5 days if you ask him and mention that you follow me, and he will give you 5 days free to check it out. But we really are only looking for those who are like serious futures traders, though. Like, yeah, it's okay if you're a beginning futures trader, but we're looking for a few traders who just want to get more consistent. That's really what we want. So if that's what you're looking for, then great. But if you're just looking for a place to kind of hang out and like socialize, there's plenty of other like free Discords out there. Just use those, right? Or if you're looking for like live calls and you just want to be told when to trade, like, unfortunately that's not the way we roll. Like my coach actually teaches us how to think about trading, and not just when to push buttons. Because if you're just following someone else's calls, you don't have a sustainable income stream. You're completely dependent on that other person. And the truth is, there's days where my coach doesn't show up because he's got something going on with his family, and our room is self-sufficient at this point. So it's pretty cool. Although we're always learning, and he's a great source of info. So anyway, let's move on. Um, so where to start? We're gonna get deep in the weeds right away, okay? And I want to show you something interesting because I think that this will help introduce some of the more simple um, trade setups that I'm using to scalp and to also find to scalp with the trend and then also to find reversals or to at least give hints that they're like little clues that there may be a reversal coming or that there's probably not a reversal coming. So I think looking at something with numbers bars, which is what the serial chart calls the footprint, might help because, like I said, we'll start at the more complex, and then we'll break it down into okay, even if I don't understand all that, how the heck do I use that to trade, right? And so we're gonna transition from more difficult to very simple, but it's really important that you at least get an opportunity to see why some of this stuff might work. So what we're looking at here, this is the ES chart, and each one of these numbers here is the historic auction basically, and how many contracts at each price point were traded at the bid versus at the offer. So what you'll it's also known as the footprint, right? And what you'll notice here is that I've got it organized in a little bit different way than you've probably seen. Rather than using periods based on time, I'm looking at more like rotational based periods. So each one of these little periods has more to do with how far the market is moving and which direction it's going, rather than being a certain amount of time. Now, if you're used to the traditional footprint, if you're used to something like here's a delta footprint, for instance. So if you're used to something like this, where each one of these bars maybe represents a time period or a number or maybe a volume amount of volume traded or something like that. This is going to be slightly different, but a lot of the visual like indicators that you're used to seeing on a footprint are still going to be relevant here. So just to give an example, if you've got a scenario where you have a trend, right? So let's just back up and see where, here we go. So here's a nice little downtrend, right? What you're going to see, where's it start? Way up here. Okay, so if you've got the beginning of a trend, what you're going to notice, it's just easier to do this by finding a trend and then backing up a little bit. It's like we kind of cheat because we know right where the trend change happened if we can just find the beginning of the next trend. So this to the left, well, actually I should probably make sure that's actually the case. Yeah, so this to the left, we're going to call at least a short-term uptrend. Okay, it's probably a counter trend rally, but it doesn't matter. It's all, everything's fractal, right? So when we zoom in on this quote unquote local top, what we're going to see are the same things as you see at most local tops, and it's the opposite of what you would see at most local bottoms on the actual historical auction. So when you look here on the first one here, I haven't actually looked at this before, but we can read it real quick together. So what happened on the way up here? Well, you can see that buyers were pretty dominant here, pushing up the market. We finished here and then continued, and you can see where most of the volume came in up here. Most of the aggressive volume, I should say. So where everybody was buying the offer. But there's actually quite a bit of selling on the bid here as well, right? But there's a lot of volume in general up here, but then remember you read these crossways, because at one point in time you can either buy at 402, let's say, or you can sell at 401.75, right? If the spread is one tick, which it usually is, but not always. For this is ES again. So you kind of want to read these diagonally as well as side to side. But when the market's moving, it's moving diagonally, right? And if it's moving down, it's kind of moving like this, and it's moving up. It's going back and forth between these prices, right? And so what we want to look at is if you look over here, we've got the green bars. That's saying where the bar eventually closed. Did it close at the top or did it close at the bottom? So here, for instance, this bar here closed at the top, right? And you can see if you look diagonally that we were building volume as price was rising, right? So that is a sign of strength generally a sign of strength. If it's coming out of a support, seeing it build as it rises on any time frame is generally a sign of some strength in buying. What is not so strong is when you get a lot of, well, there's two things you can look for. First of all, running out of volume at the top is problematic because that suggests that there's just not enough aggressive buyers. And then if that's immediately followed by aggressive sellers, you have to watch that area. Interestingly, if you have a lack of buyers and it ends up being the top, so here we have just, if you look diagonally here, it gets kind of lower and lower and lower. I mean, this whole bar was pretty weak, right? And then even here, once you got to this 159, anything above that, it was below 100, right? And even on the downside, you had some 200s down here on the left, and then here you had a 155, but up here you didn't even have 100, right? So there's just not a lot of people. There's not a lot of participants up there, and then what you see is why. And so this is a resting order that was relatively large. I don't put them all on here, but when they're relatively large, I like to have it blink in front of my face so I sort of know, hey, there's some guy putting 347 contracts on the offer. And that might not sound like a lot, but at this time of night, it is. So realize I've got an overnight threshold and a daily threshold. And so this overcame the overnight threshold. And you can see that it's not like it's an immediate sell, right? It showed up here. And the natural reaction for the market's actually to head that direction and to try to fill that order, believe it or not. Like I said, I'm not going to get into too much of like how it works. But generally, you're going to get an attempt, at least, to get there. Now, the thing is if we can't get there, or if we get there, we spike through it and then find no more participants, like if we get a bar like this, where there's just like, it's just weak right after it, generally the next stage is some sort of a pullback. It doesn't have to be the top, right? Like realize that everything's fractal. Like on this tiny little time frame, you would expect some sort of pullback. It's tradable, but it's not necessarily the end of a trend on the daily chart or something. It's just on this time frame. You could look at this on a higher time frame and see if you see the same thing. But on this time frame, that's the information you'd have. So once we see this, we want to look at what the market does. So initially it tries to go up, right? And we can put a line on it if you want, if that makes it easier. So watch what happens as the market approaches. So it gets to the line, right? Oops, jeez, did not mean to move that. Gets to the level. We get a bunch of buyers. Why do we get a bunch of buyers there? Is it because they're interested in the level? Nope. It's because to get through that level, we needed 347 contracts. So there is interest on the level. But we knew if we're going to trade above this, that we would see at least 347 contracts, because that's how much was on the offer, and it had been there since here. So it shows a willingness to trade at that level, but it doesn't necessarily mean that that's fair value. It simply means that they took that liquidity, which is what the market generally does, is seeks out liquidity, and it took it. Now, what we want to do is see what happens above that. Is it stronger? Do we build volume? Is this a new support? Or is this going to be some sort of at least temporary resistance? And so we come up and you see on the buy side again, remember this is all diagonal. On the buy side, there's only 37 contracts above. And if you see on the sell side, 0 were done here, which means that the auction was completed to the upside. Nobody sold into this level. Nobody hit market sell to get out at 405.25. 115 people actually sold 405 itself. at the exact level that someone sold here, right? They aggressively on the bid sold 115 more. It's not necessarily the same person, but just realize that when you start to see this kind of pattern, and then when it closes lower, don't worry about all these little indicators and stuff. I just want to make sure we understand what's happening here. Once you get this, and especially if you look at the sell volume, there's volume at the lows, there's volume at the highs, and there's volume at the breakdown of this bar here. See that? The 127 and the 87 are your other, if you were looking at this as an entire day with like a volume point of control and a volume area and all that stuff, your volume point of control appears to be in the center of the bar, right? You've got 71 on the buy on the offer, and then 127 done on the bid. So you've got a lot of, and then right underneath that you got another 87 and 43. So it's pretty heavy right here. So what that basically means is that buyers worked relatively hard to try to save this. And if you look, these numbers before were 47, right? And now it was 71. This one was 13. Now it's 43. So see how that was going up? Whereas here they were going down on the way up. Those prices were getting less and less interesting for buyers. You had 62 to 47, 63 to 13. They're getting, now that could be because market's moving so fast that it runs right through those levels and there were just no sellers. What would that look like? You would usually have a big number on the top, just like this. So to confirm this with the numbers bars, where this is all going, is that down here you're going to see the blue numbers. That number is a calculation of speed. It's how many contracts they're going through per second. And what you're going to see is that a lot of times the very fast bars are also very small. Now that should make sense. The smaller the bar, the easier it's going to be to trade through it quickly because you don't have as many prices to get through, right? So if you can build a small bar, you're going to get a faster speed. But the other thing to think about is how you build a faster bar. We'll get into that later. But the other thing you can think about is the amount of aggression. In other words, the number of buyers willing to take contracts from the order book by market buying off the offer, is when that's stronger, when there's more numbers on the right, bigger numbers on the right than there are on the left, which are the sellers market selling, aggressively taking the liquidity that's sitting on the bid. So just getting stopped out of a long, or market selling to get out of a short, to get into a short. You're going to see, if you've got more on the buy side, what you'll see is on the top here, you're going to have a bigger number. So here, the 226 is the delta between the bid and the offer, and you can see it's significantly bigger than some of the previous ones. Right now, when it's negative, like negative 273, what that means is there's a significant amount there's a bigger amount of aggressive sellers than there are aggressive buyers. So think about how these numbers relate to each other mathematically, and realize that you've got a lot of information, even if you don't watch the numbers themselves. Like I can actually, just in case you're curious, what ends up happening here is they completely implode, right, and give up. And then look how there's an attempt to save this level. See how there's some buyers all of a sudden, whereas before there were very, very few. Suddenly you almost have see, and you can also see it here, how the numbers went up and then they go down, right? Well, look what happens after that. What happens when that level gets taken? Big sellers, very, very, very few buyers, right? So just so you can see that, and then what happens to that level when we try to come back up, we get stuck right under that. And where is that? It's where all these buyers came in right after that big seller. They tried to trap this guy, the 118 and the 82 and the 37, those aggressive sellers, particularly these ones, the buyers tried to trap them. See that? But they couldn't get over it, and so they rolled over. And so what you're going to see down here, aggression will increase as those attempts to trap fail. The other thing that's going to increase is speed. That should make sense. What moves faster when a market, when you have liquidity getting taken due to stop loss orders getting hit, or liquidity getting taken because of like regular, like auctioning, right? Up, down, a little bit further down, a little bit further down, right? That's should be pretty obvious that where you get speed, where these numbers are going to be big, it's not just going to be on the smaller bars. It's also going to be where those attempts to trap at like usually below or at a support or resistance, when they get taken, and they're, because they put their stop order under here and they buy here, right? And so when those stop orders get taken, what you're going to see is suddenly aggressive sellers. Now, it's not always one tick below, right? But what you can see down here is there's a negative 108 delta, right? So you've got a ton of selling here on the bid. Well, why would that be? Well, most likely it was a support, right? You don't even have to look at the big picture. You already, like, there's no other reason for that. So if you look to the left, oh, what do you know? It was a support and they got under it, and that's why they put all that volume in, right? You don't actually, like, some of these things, once you understand it conceptually, you don't have to keep on, you can just watch the market and see it. But what's even better is if you don't have to look at the numbers, because of all these numbers, I mean, because you've got the signals that tell you that the thing that you told it to watch for is happening, right? And so one derivative from this would be these numbers, the speed and the delta. And so you could just look at how these interact and how they change, and right there you can get a lot of information about what's happening. So even if we couldn't see this, right? You can look at these numbers, and if you had time to analyze it, you could I could tell you right here that there was an obvious spike here when speed increased significantly, as did delta, and that spike failed, right? Because they didn't even need speed, but they absolutely destroyed it. And then you can watch here for the speed increase. Okay, here's where some liquidity got hit. I want to know what that level is, because if they retake that, guess where the market's going back to? Right? So let's test this theory. I have actually not looked forward. I might be totally making a fool of myself here, but I'll show you how I would think about this. So here's where speed starts increasing, right? And delta started to increase. It's a very small amount. It's right there. Okay. I'm not buying yet. Even if it's really bullish, I want to see them lose it and see what happens down there. And if they reclaim it, okay, so they tried to reclaim it. They ran into the level. Let's see if they take it. They do not. Waiting. Oh, there we go. So see how they got one tick above it? Oh, no, they didn't yet. They just got to the tick. What happened to... Oh, wow, look at the speed down here. So this was just a flush. And see how the sellers at the lows? Look what happened here. We got lower. Did we have any more aggression? Oh, you can't see it because I put it right on top of it. Look at where did the aggression to the downside go? You couldn't even get any buyers at the offer down there, because they literally didn't do a single tick below it, and never even tried, and they only had 8 contracts sold at the bid here. Sorry, 0 at the offer. That's what I meant. So no one market bought at the bottom, but 8 people market sold at the bottom. And then look above that, the exact opposite, right? That's a support right there. Nobody could do any business below, and then all of a sudden, for some reason, it never came back and sold into that level. So the one where it says BIMBT, that's telling me that below this, there's probably a very, very, very short-term support. Okay, we're not going to get into why and all that, but this can tell you a lot. So then, and that, by the way, is from my buddy Ed. If anybody wants to follow him, he's got some of these tools available for free. Okay, so I've adjusted it a little bit, but a lot of these things are you can build this, or you can find somebody to build it, but they're not all my ideas, right? I'm just taking other people's ideas and figuring out like, okay, how can I use some of this information and then take some other information I also know, and how can I turn it into something I can actually functionally use rather than just a bunch of numbers that are fun to analyze. So anyway, we're looking for this level, right? We ticked right to it. Look at all the aggression, right? And we did not need a lot of speed here. It's a good sign. That's what support usually looks like. I don't know if it's going to be the low, right? Maybe 50-50 chance that low gets taken out. Nice. So we get the move above, and look how it's got real healthy buy volume up there, right? Real healthy buy, and then we got a nice support right here. Okay, so I'm guessing that this low is probably the low for the next rotation up, and I'm willing to take that trade long and try to get back up here. If that would generally be what I would do. So I'm not saying it might not work. That low might get taken, and if that's the case, we reanalyze. But for now, I'm guessing that this here is probably going to be supported. I would not put my stop order right here, right? I might go like maybe 5 ticks lower. Give it a little room, right? Just in case. That's just the way I trade. I'm not saying you have to do that, but that's the way I do it. And then I don't trail stop till I at least hit like a couple more points. So if I would have gotten in at, let's say, 4,000. Oh, that's interesting. It's right at 4,000. I wasn't even looking at that, but that does make sense. So I'd want to at least get 403 for my first take profit. I might take a third off there. So nothing interesting going on down here other than some speed increase. But that's just a small bar, right? There's no real increased interest here. Where's the last place we saw some aggressive buyers? It's here, right? This level right here, 402. Or maybe that's 401.75. That's where we had a big fight, and buyers are trying to run through that, right? So let's see if they hold it. Now at this point, like I said, I'm praying for that 403 to get hit, because there's always the chance that this just reverses before you get it. And there we go. So I would have gotten my first piece off, although I do see here that we might have an issue because we've got all the volume at the highs. So we need to keep pushing here. Otherwise, I'm probably going to release this trade if this just craters, because that generally would mean that they had to work really hard to get here. And unless this, so see, this was a recent, see how we got all these buyers here? This makes me even less interested. So see how it's 97, 66, right? Pretty big. We got above, we had less interest here, right? And then we suddenly have more. So if this does not continue relatively quickly, in other words, if we go down much further, then here, let's put the line like, oh shit, put the line here where they'll underneath that where they had some interest. All of a sudden, if I'm taking this out and I see an increase in aggression, and especially an increase in speed, I'm gonna probably go ahead and release the trade. Okay, I want to see immediate interest to demonstrate that the shorts are actually panicking out, because that would explain why we get more volume at the top, and that's great. But if we're getting more volume at the top because buyers are running into trouble pushing, which usually would look like a decrease in speed, then I'm going to get a little bit nervous. So a really big, relatively large delta with a decrease in speed, right? We haven't seen it yet. There's really no reason to get nervous yet. But so far, these are moving exactly how they should. But what we really want to see is actually decrease in speed now, and holding the price. And then if we can get delta to settle down a little bit like this, that's actually really healthy. So again, my primary target is still 405. Okay, so we finally get a little bit of fight, right? Which is good. That's really good. And look how the speed did not increase, right? No reason to worry here. There's now it could be the top, right? You always have to accept that it could just turn, but there's really nothing here that's all that concerning. Particularly the fact that nobody market sold the top tick is always a good. So 5 people did, but not very many people market sold. So there's no. Oh, and we have a 0 down here. See the 0? So nobody was buying down there either. Yet we traded higher, so it should go higher. All right, nice. We get another push of volume. Why? Probably because we have liquidity up here they're trying to get to. Notice this is pretty even, right? So there's also some sell volume in here. It's just more distributed. And the speed continues to go lower. So we are fighting through they're trying to absorb, sellers are trying to absorb this push. That's what this decrease means. when buyers are getting more aggressive, but we're getting less speed and price is generally holding still, sellers are trying to absorb. And we could be looking at a high. But we won't know until we start taking this out to see what happens underneath. I'm not trying to top tick this. That's not my job. Okay, cool. So we hit our target, right, back up to the level, and I would leave a runner, and I'd take out another third. But notice all of the liquidity that's getting hit here as we go up. That's a really great sign for the buyers because they've absorbed. They had sellers here, and we thoroughly absorbed them. So as long as this doesn't suddenly end, this could be a breakout. But you have to be careful because look, there's no speed here. And we are now breaking into new territory. We should see some frantic covering here. Ah, that's not what we want to see, is it? That's not what we want to see. Look what happened up here. Nobody even got to market sell the top. And 34 people market bought. Yet we closed all the way back down here, wiping out all this. Look at Delta. Much different all of a sudden. And look what happened to speed. They didn't need very much speed to make this happen. So it might not immediately drop, but I'm definitely interested in getting out of this trade at this point. Look at how all of the sellers are piling on as we break down below these areas where they had no market buyers before, right? These zeros indicate that no one market bought down there. So the market naturally wants to go down and see what happens. And what you want to happen if you're a buyer is you want buyers to support there. Well, they tried, right? We had a 156, a 102, but look at sellers. They're getting bigger and bigger and bigger and bigger as we go down until right here where someone tried to save it, right? But that's potentially a very big problem. And so at this point, what I'd like to do is sell on a rip. But if it goes down underneath 401.25 now, I'm just going to let the trade go. So for a very small win on the runner. So we get a little bit deeper. This is a good sign. Buyers are trying to fight back without speed. So this could bounce. Nice. We get a nice little bounce here. So hopefully you can kind of see how this works. I can't draw a line there. We tested above. They tried to reject with a big push, but they didn't get any speed behind it. Had that broken down, that's very, very bearish. But it's very hard to do when you have this level of a trend. So you don't want to immediately panic here, but you want to be aware that this is exactly what sellers would try to do if they were going to roll it over. What matters is what buyers do next. They get one tick below. They find significant decrease in sellers. Now we had a little hint here, right? All of the volume was up in here, right? Right where it belonged, where there were no market buyers there before due to the market getting basically bought up right off the support, the new support. So it makes sense that we would come back to about this level where that lowest zero is on the offer side. So on the buy side, you would expect the market to come back here just to test things. So 78 sellers here and 55 sellers here all got short underneath that level. Now, notice this one actually had zero on the bid side. So those sellers, there were no sellers on the bid on the way up here, and now there are 78. So that's a lot more healthy of a move up. There was also zero sellers here. See that at the top of that bar? And so if we draw a line there, what you're going to see is that was defended. So this should make a lot of sense when you start to understand some of these numbers. If you take the time to analyze it, it's going to be like, oh, okay, that's why that happened. They push a little higher. Look at all that volume. That's beautiful for a breakout. So this is exactly what we want to see, right? And then you can get 134 up here. Uh-oh, we close lower, right? So we have a lot of volume at the high now. Sellers close lower. And they did it pretty aggressively, and they did it with less speed. So what do we want to watch for? Well, this level here, it would be very natural to come back and test that. Very natural, because we approached it and just ran out of sellers. Got higher, took some liquidity, sellers showed up again. They want that level bad. They want to know, can I break the level? Can I break this market down just by trading back here to where we have 178? To free, basically, because those guys are potentially all off sides. So they want to free those guys. Those soldiers will switch sides, Because if they thought there was a sell on the way up, they probably are going to think it's a sell when it rolls over, right? So once we get there, well, I'm assuming we get there now. Let's see what happens. Once we get there, notice all of the sellers there. Just a shit ton of sellers. And look what happened to Delta. It like went up exponentially, right? And notice speed here, still very slow. So sellers without speed don't do much good, but if they do, once things start to fall down, they get speed. So you don't really need to be bearish until you start seeing that speed increase, but you have to be cautious if they're breaking down the market without speed, because that suggests that this, if it does break down, it'll actually be a much bigger move. So let's see what happens. I'm guessing it breaks down and hits our stop here. It does. So I would have gotten trailed out, right, had I not moved that stop any further, but that was a sensible place to put the stop. Notice they tried to retake this level with 33, right? Oh, nice. So we get a nice little bounce. Does this just continue higher? I didn't notice this down here. I'm going to explain in a minute. So here we got a lot of aggression. Notice they tried to get speed to increase, and then it suddenly paused. I'm not sold here that we're going to go all the way back to the top, but because this is a lot of volume down here. And if you notice, they just kind of ran out of sellers at the top. So let's see what they do. They roll it. Oh, they tried it. They put a lot of sellers in and actually. Oh no, close lower. Yeah, this is done. So see how we got a ton of volume here. For some reason, I thought this was an up bar. Seeing all that volume up there, they all high cat. They all got trapped. And look at how speed is increasing as we drop through here. So most traders are viewing this as a lower high, is what that tells me. They're taking the opportunity to sell higher because there were less sellers down here as there were up here, and we're going lower, right? So bigger picture, same thing happened here. Look how we had less sellers on the first wave or whatever down, and then when we came back up, we actually found more sellers there as it approached. Not just the breakdown, but even as it approached. So they aggressively attacked that level. Now that's only bearish if you actually go lower, because that can create a great support if they bounce off of it, but they don't. They go lower. So same thing happens here. Here, I'll just delete the lines real quick. So same thing basically happens here, where they go higher, but they run out of energy to the upside. See how these numbers are very small compared to what's at the top? So we have 130 something plus 36 plus 287 plus 190 plus 240. All these guys are trapped up there, and they need a lot of energy to take them back. They can't even muster as much strength as they had just a couple points higher. And it closed lower with a ton of delta and increased speed. So this is going lower almost certainly. At this point, I would be willing to be bearish and look for an opportunity to short. And what I'd want to see is a breakdown with speed like this. So that's your breakdown. If you're the type to sell breakdowns, and then we just do the exact same thing going the other direction. So now remember what we did last time where we said if we have an area that has a lot of interest, that we should expect that it goes back there, right? So we had lots and lots and lots of sellers all the way up to this one, right? So we should expect the market to try to get back up there and save them, those who got trapped above it. But if they can't, it's quite bearish. So you'll see that, not surprisingly, we get some zeros here, right? And so now those levels, it'll be, if it's neutral or if it becomes neutral, they're going to want to test those. And if we can't get there, it's bearish. Look at that speed, right? So that's a problem for buyers. Now, I'm not even looking at the bigger picture. I have no idea what else is happening. I'm just going to look and see if we can find... Oh, that's right. I remember looking over this now. This actually goes on and on and on forever, like for a long, long time. But you can hopefully see how, once you understand what everything means, you can figure here. Let's just see if those levels actually become significant. I'm curious if we even get back there. Eventually we do. But I wanted to show you that first. That's about as simplistic as I'm going to get. Now what we're going to do, where the hell did those go? 4,000. So now what we're going to do is, I'm just curious if this, here, chart end, it's easier to do it that way. I'm curious if those levels actually became important. Because I would not be surprised if they did. And normally we'd expect them to be a pullback and bounce situation. Or, okay, so they use them as resistance the first time up, right? And that makes sense. They found resistance there. They pulled back. They muster up some strength down here. They get a little increase in speed, increase in delta, and they rip higher. They rip right through them. Notice where delta increases right here. Sorry about the cat making noise. And then suddenly we get big speed. Why? Because they're covering, right? Shorts are covering through these levels. So now what I would expect is that these levels, they want to come back and refill them and retest them, but they're probably going to be support. So let's see. Do we come back in there? And what happens there? Oh, we can't even get there. We haven't gotten there yet. Oh, okay. They just ripped. All right. So all I'm saying is that once you understand what all this stuff means, it's not hard to make us do a simple analysis once you have enough time. But the problem is when you're trading, you don't have all the time. All right, apologies. My cat is very naughty and likes to get my attention by messing with stuff that he then tries to eat. So, my apologies. I'm back. So what we expect to see at those levels where we get really when we get, let's see, where was I? When we get a lot of speed suddenly and then a bunch of aggression, what that probably is sellers covering, right? So these levels are going to get re-auctioned eventually, but it may not happen very soon once you see that going through. So the whole idea here, again, is that you can use the information inside of a candlestick chart, the stuff that you'd find on the footprint, to identify, for instance, in those two situations, either a local top, right? Or you can also see a situation where continuation is likely as long as that aggression continues. This area, like I said, it might be re-auctioned, but unless it's taken back, you're gonna assume that you're gonna continue higher, unless you get another situation where you have one of those tops being put in where you have someone trapped, right? So even though they pull back here, they can't even re-auction this. So there's certainly no question it's going to hold for now. And you can see, even though they're putting in these big, remember these are sellers on the order book, right? So there's all these sellers on the order book. Yet look what happens to price; it just rips right through it. And look at the green numbers versus red numbers. There's like way more green numbers up here, very very little aggression. So it's just a total squeeze. People are putting huge numbers up on the order book, relatively large orders on the order book, and they're just taking it, right? Taking it. And then here's the sellers coming in, right? Notice here, we didn't get a ton of buyers at the top, but we got some aggression at the top, right? But coming up to it, they took off a lot of pressure here. See how this was relatively fast, and it had a lot of aggression to the downside. And then this is the close, and it had a ton of aggression to the downside. So that could be very bearish, but if they can't break it down, those sellers are going to get trapped. So they come down, they do break it down through that, they flush, but yet we can't get anywhere near the support, right? So structurally, it's just going back to old resistance and creating new support. We get another zero, auction complete here. Right? No buyers able to buy at that level. Rips higher, and you take that liquidity. Maybe not. Nope. Did they not take that liquidity yet? One more pull. Look at that. One more pull. So they come back, re-auction this. Totally natural. Not manipulation. Totally natural. They do it on a shit ton of aggression, and actually get divergence there as it closes higher. And now it takes the liquidity. And then once that's all over with, liquidity is taken, right? Did liquidity get taken? Oh, it did not. Oh, that's interesting. So we had a big seller sit there on the. There was a big seller, and they absorbed the buying overnight here. I haven't really been watching tonight, and they tried to sell it off. They made a new low. That auction was complete, right? We got actually 1, 2, 3 zeros in a row, and a bunch of them on the way down. So very, very, very low volume in general down here. So it's a low volume low, uh, and yeah, just be aware of that. It may get retraced. They're gonna wanna check that out eventually. They get a lift. You can see how aggression is increasing as price increases to aggression to the upside, right? We're getting some big numbers all of a sudden coming in here on the top, the big green, uh, big white numbers with the green background. And then you can see that we had some speed once things started to move. They tried to re-auction. They successfully re-auctioned where we were speeding up, and they went higher. So now, here's another one, right? Speed goes up, aggression goes up, small candle, small bar gets re-auctioned. That becomes support. See this one, speedy increase, re-auctioned. Now this can become support. So if that one holds, higher. And we just keep going like that over and over again. I don't remember if it does. They try to hold it, they fail. And that's where we are right now. Okay, so now I want to show you something interesting. That's all kind of complicated, but important to generally understand. What I want to show you is you don't actually have to look into those numbers and see all that. And you actually don't even have to look at these numbers and make those decisions if you don't want to. You can, and it will help you understand it if you watch it, but I think it's great for analysis, but really hard to do that live. So now what I want to show you is, first of all, the bottom indicator. So, like I said, if you understand how the footprint works, now we're going to take some of that information, some of that math, and we're going to turn it into visual signals. So I'm not going to go into all the math of how to do it, but I just want you to understand that we're taking all that same information, and now I'm just taking a derivative of that information and saying, what would that look like if I plotted a line chart of, this versus this divided by this, right? I'm not, like I said, it's not important what it actually is, actually, believe it or not, because you can do this with literally any derivative you want. You can compare two different ideas or three different ideas, and then see what happens if you divide them all by some other concept, right? Like it sounds complicated, but it's not. So now what we can look at is the lower one, and what I want you to see is we're going to look for situations where that lower indicator has divergence, and then we're also going to look at the zero level. So see that zero line right there? Do they eventually put a line there or no? They don't. Let's put a line there. I thought there was a line there, but I guess there's not. So we're gonna put a line right at zero. Maybe I have to. Maybe it's only if I zoom in or something. But we'll put it there in green, or we'll put it there in something other than green. We'll put it there in white. So that is the zero. Maybe I'll make it like dotted so you don't have any trouble seeing the other line. There we go. So that's going to be the zero line, right? And what we're gonna do is I'll just go back to like a random spot because it doesn't matter when we look at it. It'll pretty much work the same all the time. I want to show you how the behavior of this line and the movement of the footprint are going to interact. And what you'll see really fast, probably, if you're good at pattern recognition, is that there are a number of very relatively easy patterns to trade on this time frame. You'd obviously have to zoom out and see a bigger time frame if you want to make bigger decisions, but this would be for this individual time frame. So, idea number one: we have a market that is balanced or dropping. Okay, so relatively balanced, but making lower lows and lower highs. Okay, and then we're asking, where do we think that market might get a rotation up? Well, you can already see that we've got these little colored areas here. That's actually a different indicator, but it's going to work in a very similar way, and they'll actually work together to filter each other. But what I want you to look at for now is just this one, okay? And then look at the structure of the market. Is the market making higher lows? Is the market making lower highs? And then what is the indicator doing when we make said lows or highs? So, for instance, here we've got higher highs on the indicator, right? And here the highs are decreasing, right? So we know already, even before this, when this is just rising up like crazy and you can't get this indicator to hold above the zero line, you know something's up. Like it's not, you've got a situation where it's unsustainable, but the actual trigger needs to be determined, right? It you don't want to sell at the very first sign of that. You need something more to tell you, okay, I know I'm looking for a sell here, but what exactly should I be selling is a question you should be asking, right? But I just want you to see that the highs get lower even on the indicator as the highs get higher here. Now look at this one. All right, we pull back. Right, we pull back. Okay, those two kind of align, and now look what happens here. What do we do here? We make a higher high. This one's a lower high. Right, so that's weakness, or sellers are getting some aggression, and you can see it in the numbers if you're looking closely. You might even be able to figure out like what the equation basically is. It's not complicated. Okay, and then what happens here? Well, we make a lower high, right? Here we make a higher high. So it's either natural divergence or hidden divergence, but one way or another, the indicator and price are not matching when we look at the highs. So now let's look at the lows. So here we have a low, right? This one. And then price goes higher, but the indicator goes lower, right? So that's what's called hidden divergence. And in a trend, that generally means the trend is likely to continue. And in this case, price is trending higher. So here would be an example of a place you'd want to be a buyer, not a seller. Now, keep in mind, we also have this other information, which is kind of competing against that. And so again, if that's confusing, good. That means you're actually following along because there's more to this problem than just this one idea. But then what happens next? Well, then you make another higher low here. See how they pulled back, right? Okay, this one actually goes along with it. Makes that general higher low. Unless you want to count this a higher low, and then it's a lower low. But one way or another, it's bullish, right? Either natural divergence in a bullish trend or a higher low in a bullish trend, one way or another. Then what do? They make a lower low, right? Well, this one also makes a lower low. So that, for the first time, is a sign to the opposite direction. That is bearish, right? And that's the first time we've gotten bearish divergence, but now this is actually a bearish indication on the chart. Now let me just delete the lines. I want you to see if I drew a range here. Let me back up a little bit. So if I look at what normally happens on this indicator, right? We arrange it out with like a fib tool, let's say, and I go from the low to the high. What you're going to see is that at this point we got significantly lower than we've been in a long time, right? A whole hour. But for quite some time we have not gotten a low this deep, right? We haven't had aggression quite that low. Yet we are making a higher low on that time frame, right? But we're making a lower low on the indicator. So we said that is hidden divergence, and that is only relevant when you're going in that direction. So if the trend is going in the direction that you're trying to get in on, so if it's going up, that is hidden bullish divergence. The idea is the indicator is getting quote unquote oversold and needs to cool off. And generally the result is continuation of a trend. Now, if you try to do that in a downtrend, oh, do I not have any more information than that? Oh, here we go. If you try to do that in a downtrend like this, you're going to run into trouble. You're going to run into neutral for a little bit and then usually bearish. But here is what happens next. So we get this indicator saying actually that if this level is tested and held, then it can be considered support. But if it's lost, it's likely going to act as resistance. So we're just going to mark that off. And then what we, oh shit, I lost my zero line. Fuck, I need that. Sorry. I forgot to lock that. So we're going to do that right now. We're going to lock this. And we're going to make it dotted. Okay. Oh, and I forgot to change it into a 0. It doesn't help much. Negative 77 or whatever it is. 0. Okay. All right. So what happens next, right? So that was a sign of bullishness, but in a bearish trend, so not that relevant. So then we make a high, right? And then here, price makes a higher high, right? That coincides with this. So we can even give it and say, okay, maybe that's bullish. But what happens next? Price makes a higher high. We make a lower high. Uh-oh. And this is also a lower high on price, yet higher highs, right? That's bearish. That's a problem. If it's in a bearish trend, that's natural divergence, or sorry, hidden divergence. So that could be a problem. So now let's look at the lows. Well, the lows suddenly make a higher low on the indicator and a lower high on price. See that? So that is a sign of some bullishness. So wait, we've got bearishness and bullishness? Like, yeah, that's what happens when you have consolidation. So what it's basically telling us is there's no change. So whatever the trend is, just follow the trend. Well, in the bigger picture, the trend was bearish, right? And here I said the trend was bullish, but remember, we had bearish information since then, right? We had this lower low. And then we had the divergent highs to the bearish side. So we're going to assume bearish, but it could be neutral. And that's until proven otherwise. So you can see here, we make lower highs, that's bearish. Lower highs here, right here. Slightly higher high, or is that a neutral high? I can't tell. If that was a lower high and this was this much of a higher low, or a higher high, and it's bearish, that's probably a sell. So then we continue lower. Okay, we get a spike right here, right? So let's use that. And then a lower spike. What happens here? A higher spike. Is it bearish in the higher time frame? Yeah, it's probably going lower. And you get lower. So if you need an idea for how do I know which direction I should be trading, like should I be looking with the trend or against the trend, an easy solution is to think about what happens at highs and lows when it comes to these internals and use math to turn them into something visual. Hold on real quick. Okay. So that's now the problem with that is that you have to keep on looking at this chart, right? You have to say, oh, do I have a lower high? Do I have a higher low? A lot of people get confused by divergence. So you could simplify things with Sierra chart, telling it, well, whenever there's this divergence or whatever, give me a color, right? And color the background a certain color. So, for instance, color it orange whenever there's bearish divergence, and color it blue whenever there's bullish divergence. And that way, you don't have to look at the numbers, and you don't even have to figure out bearish or bullish divergence. You just need to watch for the color change. So I wish it was that simple, and honestly, you can get pretty far doing that. You can also use those levels as support if they continue higher, and that will work pretty well. But an even cooler trick is just watching the zero line here. So I want to show you with this concept, again, just taking these numbers and comparing them with basically what's normal. I'm pretty sure I can erase this and be safe. Yes. Okay. So now what I want you to see, I'm going to go back to where it's bearish, where it was clearly bearish, right? And let's look at what happens when it's clearly bearish. Okay, this is the bearish, right? So when it's clearly bearish, how long does price spend above the zero line? Not a lot, right? Very rarely does price get above the zero line. Now, how much does price spend below the zero line? Like a lot, right? When does it not go? What happens when the price goes above the zero line and then falls down? Let's check that, right? That's a very simple thing to see. So let's say when we're bearish, when price goes above the zero line here, what happens? And then loses it. What happens next, right? So here's a bar where that occurs. It was above. It's now below, right? So we're going to put a marker right there where that happens, and let's see what happens next. They try to save it. Price goes lower. Indicator goes lower until it gets above the zero line. Notice that is a lower high currently. So if this immediately turned over, it's lower high on the indicator and lower high on price, right? So let's see what happens. Okay, so now, remember, this is that first time they fell below the zero line, was right here, right? They've now come above the zero line and fallen again. This time, where was it? It was here. Basically the same spot, right? We'll move it down there just to make it accurate. So, same exact spot. Then what happened? Back up above, right? And stayed above for a little while. It does clearly get above this level. Where does it fall back below the zero line? Right there. Back below the zero line. So it had gone under the zero line, right? It reclaimed it. It bounced off of it. Headed higher for a little while. Made higher highs on price. What happened on the indicator? Bearishness, right? Natural bearish divergence in a bearish trend above zero. Above the zero line. And then price fell down below zero. Now, what about this other time when price fell below zero? What did we have? We had hidden bearish divergence, right? Higher high on price. So in this case, on indicator, sorry. So the indicator exhausted slightly and needed to rest, right? Price continued to drop. Okay. What about the next time? What was this? This was just a lower high. Okay. When it's just a lower high, and that's it, not divergent. If that lower high is broken, it will be short-term support. See that? When it's natural divergence, hidden divergence, when the indicator gets overbought or oversold, but price just keeps going lower highs, lower highs, lower highs, that level needs to not only be reclaimed, but also held on a pullback before you can get a reversal. So this level here would need to be support for me to think that this trend is over. And then here you can see natural divergence is where we have a lower high on the indicator and a higher high in price. This is generally in a bearish trend, especially after hidden divergence and then just a lower high. Something like this where you've been above the zero line for a while, but you haven't like prior. Every other time you go up there, it just rejects, and then you go up there, you stay for a while, it makes a bearish divergence, and it drops below like this, all while happening above zero. This is your best, most aggressive, but best opportunity, probably the highest you'll get a chance to sell. Now the problem is where do you risk off of, right? Like you don't really have a visual place to risk off of, so you'd have to use perhaps the high here. On the indicator, right? One of these earlier highs, I mean, here, and then you could also just look back at the actual the math that the derivative is based off of, and you could say like, do I see any other patterns here that make me think that this level will hold? So looking at like aggression here and saying, well, they did have some aggressive buyers here, and above that they really didn't have any. So maybe I'll put my stop behind where all these aggressive buyers were up here, let's say. That's pretty damn tight, but I don't think that's going to work. But
Let's see. I don't remember if it does or not. I was gonna say that's you don't want to put it on it, right? You want to go maybe that. Like I said, I was thinking this one makes sense, so probably like here is probably the reasonable spot to take it. But yeah, it's I would expect that it came back up here, it tested this, and then if it's bearish, it shouldn't go much further. Expecting those to act as brick walls is asking a little much. But look what happens to the indicator. It just absolutely dive bombs, right? So what do we know about that? We know that when it makes lower lows on the indicator but higher lows in price, that it's probably not going to continue if it bounces. So if this starts to lift, and especially if it goes back over the zero line, and we haven't broken down this level that I mentioned before was really important for buyers to support to use as support, I'm out of that short immediately, right? Whereas if we can't find any buyers anywhere, well, then it's just going to continue lower, right? So they get to that level, and they just find zero interest whatsoever, even below the level. So there's no reason to exit the short at all. The only way you could really get short here is if you aggressively took that short. You could wait for it to give you a red bar that closed underneath the level if you want, or whatever. And if you want to be more conservative, you'd wait to make sure this doesn't drop, doesn't bounce. And then if you saw some aggression on the buy side that was rejected, you could sell aggressively or wait for a pullback like that, and then just put your sell order somewhere in here, and you'd then have to put your stop order most likely above this, at least a couple ticks. And what you should expect is from now on, as long as it continues bearish, as the indicator gets back above the zero line and loses it, that's probably going to be a pretty fair place to sell, right? Because now, once again, you have hidden bearish divergence. So unless this level is taken, it's bearish. So you can just put your stop above that, like here, and short the breakdown, which is here, right? It broke down right there. So this breakdown, that's your stop. Not bad, right? 92, 93, that's a 2.5 point stop, and it never even takes any heat, right? And all you needed is just some simple calculus, basically. As simple as calculus gets, just one derivative of some information that you have. Just how does this information relate mathematically, and how do I want the indicator to look? If you know nothing about calculus, just plug in the freaking numbers and see how it looks, and if you can make it look similar, it'll probably work. You just want it to move with the market most of the time, and then when it gets more aggressive, you need to see that on the indicator. It needs to make sense, right? When you see these big changes, it should go the direction you want it to. That's more than enough information to build this to yourself. Okay, so notice here they're making divergent highs, natural divergence, right? Lower highs on the indicator, higher highs on price, and it's bearish. Just keep selling. Like you could literally add there. Same thing here, right? Natural. Oh no, sorry. This is hidden divergence. Keep mix them up. So these are okay to sell too, but just realize that you might get stuffed. They're not going to work quite as often, and you really need to see those hold before you even think about buying. So when this breaks down, I think is this the one we did? Now I'm getting confused. This is the one we did. So if you sold this hidden bearish divergence, you don't want to be a buyer unless that gets taken. You need to see that. Buyers need to take it and defend it. So they took it, they couldn't defend it. See how this seller comes in? I assume they're not gonna get there. Yeah. Because they keep making divergent highs. Right? Higher, and then here's the hidden divergence. Higher high in indicator, lower high in price. Now buyers need to take this and hold it. Right? And so you can just keep going down like this. Okay, hidden divergence, it should continue. Right? So we'll put that as we'll use a regular line for that. Wait, it needs to be above the zero line. I lied. That one, don't sell that. You're gonna have trouble if you try to don't try to sell the hidden divergences that are under the zero line. It's not that they won't work. You're just gonna you're gonna risk shorting the whole. And you're gonna have an opportunity. So this one, so hidden divergence, right? So now for buyers to take this back, they need to take that level and hold it, right? If you look at how far you've gone, just structurally, you should kind of see that this is a pretty dangerous place to sell. Sorry, Definitely don't just buy it. But it compared to these other ones where you had many spikes, right? This structure is much better to sell than this like middle of nowhere underneath all support. You in my opinion, you should wait for a pullback unless you're only looking for like 2 or 3 prices, right? It doesn't mean it's gonna immediately go higher. I'm just saying you realize that if you get short here, while it will probably work because of this divergence above the zero line, if they immediately take this back, you cannot be patient about exiting. You need to be really vigilant. So it goes lower. I mean, and it does work, right? So all I'm saying is just recognize. Not saying you can't do it. I'm saying recognize that you're being very aggressive. Because that's a really good way to get messed up. Okay, so here's another one, right? Bearish divergence. Oh no, I'm sorry, higher high. So this is actually a higher high. So, this one is just a lower high. So that's just bearish. But if you look at these little ones, if you want to count them, it might be a higher high. So I wouldn't touch this one personally. I'm just going to keep this one, and I'm gonna leave it and see what happens here. And if they start accumulating down here, I'm not shorting anymore. So if structure starts to be supported, and if they start spending more time above and doing the exact opposite where the spikes go underneath, well, then you know that we're going to probably break that level. So let's see. Again, you can watch these numbers if you want, but you'll see everything you need to right here. So what do they do when they get to zero line here? See how they try to support it, right? But that, it might be okay. See how they took this and they held the zero line. So let's see if they break this and then hold it. We could have a low. Oh, they lost it big. And there's our divergent high, right? Lower high, price went higher. So this would generally be an immediate sell. Well, it's not there. It's before that. It is there. That kind of sucks. It's pretty low. It's aggressive, but it's generally safe. It's quote unquote to sell it. So you'd have to take you not surprisingly you take some heat. And it works. Do we take the low? Yeah, so I mean, I would prefer to wait for this, but whatever. Okay, there's another one. So high is here. Hidden divergence, right? Higher high on indicator, lower high on price. So guess what? We get to take our line in the sand and move it. Now, if buyers can take that and hold it as support, it's probably not bearish. If you want to short this, you're really aggressive because it's at the low, right? That's a red close. But if it's bearish, it's going to work. It's just why do that? You know what I mean? In my opinion. So technically, well, should it go lower? It should. But at least in my opinion, wait for this retest. If you must keep shorting, take a retest when you're at the don't short the very low of the day. So here's these little rejections are confirmation that buyers are just totally giving up here. Like nobody wants anything to do with this. This is probably capitulation. When you start seeing that, by the way, and then see how this almost looks like a head and shoulders. That's my first hint that I'm not looking at another chart. I have no idea what this does, but just looking at that, and the strength that they put in here. I don't even have to look at the numbers, but if you do, you might notice what's going on here. But this is a big change in character right here. They all gave up. They flushed. They came back up. They rejected off the zero line, and then all of a sudden, in the exact same spot that nobody wanted anything to do with up here, we get a fight, and they've closed that candle, that bar bullish, right? So we don't have a high yet, so we shouldn't even be thinking about shorting. So let's see where they go. Okay, there's the high. So we got just a regular old lower high. I'm personally not selling those unless we are at resistance. This is not a resistance. I don't know where we are on the chart, but we're definitely not a resistance, right? We didn't do enough of a pullback to get resistance. So I'm going to wait and watch this low. And if anything, I could start looking for aggressive buys if they treat it correctly. But for now, I'm just holding back there. I'm not going to be aggressive with just a lower high. So let's see. They do take the low. Okay, they tried to rip again. So now, if this reverses, this would be our divergent high, and we could move our line in the sand. Let's see if they reverse it or if they start. See how they held the zero line? We can't. It's not a, it's there. Okay, now divergent, hidden divergence. Right, our line in the sand that we had up here. It's now here. So now bulls just have to take that level and use it as support, and it's all good. So actually, it's this. This was the high. This was just that's interesting. They put hidden divergence and then immediately natural divergence. So this is our line in the sand, and then if you want to be really cheeky, you could sell that, because that's natural divergence and breaking down below the zero line. As long as it's still bearish. Now that's the question: is it still bearish? Are we spending most of our time below the zero line? I'd say yes. So buy the book. You could sell it. And you get absolutely crushed. Not surprised, right? It's pretty low. And you'd know right away. Look, after this move, here. After this move, look what happens to that line in the sand. So let's say you sold here and you're like, I think it's going a lot lower. We're nowhere, right? You have no other information other than this indicator, and you're like, hey, every time it makes any kind of divergent high, I'm just going to sell it because I'm an aggressive trader. Like, that's okay, but realize that when they retake this, you need, like I said, you need to exit, because you're basically anticipating a breakdown. And if they can't get that breakdown and they come back up, this will be the low, right? Because remember, this low looked like accumulation. That's what accumulation looks like. Remember, it was not a spike, right? It was not just a spike. They tried to sell it. They went a little lower. They went a little lower, and then they had, I didn't point it out, but they had natural divergence, bullish divergence, for the first time in a long time. See that? The low on price was actually a higher low. So that might be a good reason just to stop shorting altogether. But I would personally be okay selling the divergent, the hidden divergence. But if I was this low, just because but you know what, it didn't drop below the zero line until here. So no, I would say do not sell it, because you're so close to that bullish divergent low. And you can just sort of see that you're not trending with the level of aggression as you were back here. It's not just free falling, and every time they try to grab it and spike, they just take it right back, right? And sometimes they can't even get over the zero line. That's bearish. This, if you look at the structure, how far was I? If you look at the structure of it, what it looks like right here, this is significantly different structure, right? We made a new low, but this retrace took this high, right? After it's a little bit hard to explain, but like it's quite a bit different than, it's more similar to this one. Right here we had bullish divergence here that I didn't point out. So if you wanted to skip this breakdown, you could, right? Because they have a chance of holding this. But once they give that up, then you know it's bearish. So if you want to wait and you're like, hey, that's really deep. I've got bullish divergence here. I'm basically at the low. That is an aggressive place to sell, right? It does work, and you do get more, but eventually that's going to fail, right? Eventually one of these are going to hold. I'm just not trying to guess the low. You can either just keep doing it till you're wrong and hope that you did it right enough times that it pays for it, or just use less and less size as you're getting deeper and deeper, or you have more and more evidence that things might be turning around. Now, I don't know if this is actually low, but look how they bounced off the zero line here, and they're about to make what looks like a higher high on the indicator and price, and they've gotten above our line in the sand. So if they hold this line in the sand, it's not bearish. There we go. It's a cat ran into me. Sorry, I didn't mean to do that stuff fast. So they gave it up, right? Right through it, took out that. I would personally not be shorting these, but they did give it up. So let's see if they can reclaim it, because nothing's changed. They just need to hold that level and use it as support. They reclaim it, right? So really deep, look at those levels, those numbers, right? Really, really deep low. Probably caught some sellers selling aggressively down there. You think? Look at how deep this was. See that? Like, that's the kind of thing you want to see if you want capitulation. This. just like this one, right? Now look, you didn't necessarily have to sell that, but it did go lower once it turned around. Same thing happened with the other one. So this might not be the bottom, but chances are it's not gonna do another rotation this big. It just might sneak under that low and then bounce, right? Just like it did here, snuck above this high and then divergent high rip, right? So let's see, do they hold it or do they take one more low? I would not be surprised if that low gets taken, but let's see if they do. Okay, see how they're trying to hold this level? And now we're spending a little more time above the zero line. Let's see if we can hold that zero line and the level at the same time. Or do they give it up? So they're trying to take that low. That big spike is usually problematic. Yeah, see how they're doing the same thing here they did before? So they're trying to accumulate. Let's see if they can do it. So that pattern looked here. I'll show you what I was talking about. This pattern here is almost the same as the last local low we saw. Here, see that pattern? Spike, high cat, spike, roll into a higher low, right? And then didn't we see it? Was that it? I thought there was one more like that. Maybe it was further back. Here, no, not that one. Where was it? No, I can't find it. But it was like, it was a hidden divergent high, this, spike, and then natural divergent low, and then they reclaim it, right? That high gets broken, right? Doesn't mean it keeps going, but when it does this high gets broken. There's liquidity up there from all the people who shorted here. They put their stop here. Look at this. See how these kind of line up? Right? You're going to get it. And then on price, it's a higher high too. You're going to steal that liquidity a lot, I bet. So here, it's kind of the inverse here, where these line up. I didn't notice this before, but look, see how these line up? Right? So wherever the low is here, you're going to steal that liquidity a lot. And if they bounce it right there, if that's the bounce, once they steal that liquidity, see that? If they rip it there, it's probably bullish. And then here's the other thing on the other side. So high, divergent high, but it's all in like one roll, right? So if this level, which is basically zero, if you get another bounce there, like that high probably gets broken to take the liquidity. So this high here, because it lines up with this high here, either this one or this one, probably this one gets taken, the higher one. It's the opposite for the other way. So I'm guessing, and then here's this one's even more obvious. So see this? Okay, so spike, divergent low, but it's like right away after bouncing off the zero line, and then they lose the zero line, right? Watch what happens right here. See how this lines up? See how these are like all aligned, right? So that if they dip here, they're gonna take that high. I don't know if they do dip, but they don't. They just rip it. Okay. If they would have rejected off this, they did on the indicator. But when they reject that, I know that high is getting taken, wherever. And actually, so now they've done what I asked them to do. They got over. Whoops. They got over that line in the sand. A couple times they got over it, and now they're holding it as support. See that? There's no more selling under the line. So technically I'd like to see a red candle. If they can give me a red bar, that would be helpful. But notice we're going higher, and we don't even have to put in a lot of aggression. right? All of the indicators staying under the zero line. So it's all like hyper fast. Oh, this is the open. That's why. So it's super, super fast. And yet there's not a lot of buyer aggression. So this is a squeeze. That's a squeeze. So we want to go back to where this started. Where did this start? When they lost the zero line right there, right? This, oops, that low, that pullback low right here. See how it's zero? And they came back, they re-auctioned and took off. This low needs to be support. They can test under it, but they got to find support down here. Remember, that's where everything changed, and it became. Now in retrospect, it's going to obviously look like accumulation down here, but we knew that was the case potentially when we had that hidden divergent low right at that level, and we're like, okay, if they take this back, right, they broke it down here, and if they take it back and they hold it, it's good. Well, they took it back, they lost it. They took it back, they lost it, right? That's what accumulation looks like. They test and they test and they test and they test, and eventually they just run out of sellers, or they trap them underneath the low. Now this time they just ran out. See the zero down here? Pre-market? That sucks, but it's just the way it goes. You got all this liquidity down here, and they just don't get to it. And they just rip it, right? Squeeze through. So wherever this red candle comes in, it's got to bounce down there. So let's see what happens. Look how buyers have still not put in any energy here. It's just all sellers doing all the work for them. They come down, we get the sign of divergence on the other indicator. That's usually a good low. If they get under that low, it's almost always buyable the first time. So let's see, do they get under the low? They just hold it, and it's over. So we could not get here, and you could use the exact, so you could say, okay, I don't want to commit myself to being long until we break over the zero line and we start holding it as support. So you wouldn't be long yet. You'd be like, yeah, this kind of looks a little bit sketchy, right? And you'd miss all this, but you know that this push might not be all that healthy, right? And so when does that change? Well, they come back to see this low here. We know with this indicator in the background, I know that low, if it gets taken and reclaimed, it's immediately, I'm buying it, like every time. So let's see if they do it. And then I'm looking here for the zero line to start getting used as support. And that happened really for the first time right there. See how they got over it? They pull back, they used it as support, and then they made a higher low. Yes, this one's under the zero line, but it's not a brick wall, right? It's just a reference. And like the easy way to think about this is look where we're spending most of our time, and then look what price is doing. So who's being most aggressive, buyers or sellers? Sellers versus buyers. I'd say sellers are doing all the work, and they've been doing all the work for a long time. The reason is because this was just a squeeze. The buyers didn't need to do anything here. They just they could step back and let the sellers who were trapped just bid the market up. Finally, sellers get to work. Have they gotten anywhere? No, they haven't gotten through this. So it's bullish as long as, like I said, that still stays the same. It's bullish till this holds, but this should make sense. The indicator is looking bearish, and we're getting rotations down. So you can still take those shorts, right? Like it's still the same thing. Hidden divergence high. If you want to short that when it breaks down, you can. Right? You can short it. It's just you got to be ready when they take the liquidity again, because it's just not that bearish on the higher time frame. So it's got to be a very, very quick one. But if it's bullish on the higher time frame, what are we going to see happen when we put in bullish divergence? Well, it'll probably lift bullish divergence, right? Higher lows on the indicator, lower low on price, or medium or equal low on price, and we take the low. So we tried to lift, and then they ran into divergence again. So what do they do down here? Let's see. Are they able to so they have to reclaim. So this is our line in the sand, right? And this one was the new one. Remember that we added when they broke this. I said that was that low that I thought would get re-auctioned, but they really need to turn it into support because we spent all this time below zero, and we'd probably come back and re-auction that. We did. We also got under this important level. So if we can get back above green, I'm buying at 39.6925, right? And if I was aggressive and bought this one, you need to realize that you're going to get another chance if you get stopped out on this, right? It's okay if you buy this, put your stop here, and get taken. It's fine as long as you re-enter here, right? So you can wait for it to bounce if you want, and there it is. See how price continues higher. This is holding the zero line. Pretty sure this is good. Here's the bounce. No, not yet. They haven't done it yet. So another squeeze. That's unusual. It's OPEX, I guess. OPEX. So do they hold the zero line? See how they did not hold the zero line? See that? And so this is unsustainable, right? They come right back for it. So if you want a longer term buy, they need to be holding the zero line. Wow, they get underneath our line in the sand. Now, do they immediately reject? Yep. There's my signal again, right? So that low is good, at least for a bit. And if we get under it, and then reclaim it, I should be buying it again. We get under the zero line, or over the zero line, wow, dyslexic, and then reject off of it. See that? That move right there, you can buy as long as you don't think, like you can see it on the digits too, but that's what you want at support. It's got to make sense, right? But as long as you can then hold it now, you'll get nervous if you go higher and it rejects off of zero. That's not normal. It should start holding it and trending higher, and this is instead making a hidden divergent low. So that low, remember, just in the inverse as we did before, if they lose this low, they have to reclaim it. Otherwise, it's bearish. They lose the low. Do they reclaim it? Yep. All good. Right? It's exactly the same, only opposite. Now look at what happened here. Higher lows, lower highs. What do we know? If it's bullish on the slightly higher time frame, which I'd say it's at least neutral, if not bullish, on the higher time frame, it's probably going higher. You're trading with the trend and with divergence. And so, yeah, if you weren't long yet, well, yeah, this is your stop, and that's your buy. And there you go. So even if you missed all the rest of them, you've got, what does that break? Let's say 70, 39.70. Immediate MFE 9 points without any pressure whatsoever, and then it continues higher for another couple, another two. And can you trail your stop here? Well, notice that we can't hold above the zero line, right? You know what I'm going to say, right? Until we do that, I wouldn't be trusting that low is safe. So see that, how it's like, it's still, the indicator is spending all its time below the zero line, yet price is squeezing, right? So this is not a healthy move. Doesn't mean it has to immediately get retraced, but I'm not going to be like, oh, I'm just going to leave my stop at the low and see what happens. Like, there's no reason for that. Like, if they start to show aggression to the short side, you can probably just let it go. So let's see if they continue. Like, they might just not. Yeah, they make another high. Now here's that scenario again. Right? Diversion high. Hidden diversion high. And we said that what usually happens is that high gets taken. Right? And then it can roll over. Let's see if that works. Does that high get taken? Right there. High gets taken. Okay. Now, if they roll over, I'm a seller. Right there. I'm out. Done. Did I get the high? No. Did I save myself from a really frustrating day? Yeah. Right? I don't want to give that all back. Okay, so like I said, I know it's a lot of information, but the important part is to recognize that we started with the most complex thing you can get, right? Every single point with how every little auction went. And then we said, well, really the only information we need is these two numbers. And then you realize, well, hold on, if we know what normally happens, and then this is like, look, all we're doing is searching out for abnormalities. Like, why don't we just visually make a derivative of that and see what it looks like? And suddenly you realize, like, oh shit, the same shit that fucking works on RSI and MACD on the daily chart, like all of a sudden you can get that stuff to work here. It's just that you can't use a MACD. Like, it's not going to work with a MACD. Like, that, there's way too much lag in a MACD. Like, that's all based on that's if you just have to make the math make more sense. We're taking, rather than waiting for a moving average to get triggered, to get like crossed, and then making a note of it. We're actually looking at order flow, and we're saying, okay, that occurred. Let's put the numbers in here, and then we're telling the computer, okay, I just want you to look for only when these two things are related, and the other one is inverse to that, and then I want to see how that tracks with price, right? And what kind of, now you're not always going to have the exact same crossing zero line, bullish divergence. That's always going to be your buy point or your sell point. But notice, if you go back and listen, like there were logical steps for each condition, which you're going to have to figure out on your own because it's going to be a little bit different for every indicator. But it's going to be very similar. It's just you're going to have to slightly tweak it. Like, is it that the level has to be held? Is it the level has to hold a support on the next breakdown? Like that's the yeah, I guess it ends up working anyway. But that's the key, is to know what the possibilities are. So now what I want to show you next, this is kind of extra credit, then I gotta go to bed because I gotta work tomorrow, is if this is too much information, right? And if this is like too hard to even have to think about all that stuff. What we've done in our trading room is we've transformed that, like the indicator, right, and the numbers into like color coded. Where's my 6-7? Let's do 6 tick. We'll do 6 tick. So we can now. I've got a lot of indicators on here, but the truth is that you don't actually need all those. All you would actually need, if you were looking for the same kind of signals with our indicator, with our algo, you could actually turn off the majority of these signals, and what you would, or just make them like binary, so that like every sign of aggression would be maybe a star, and then, or an orange bar, and then the only other thing you'd need would be pink and purple bars. And what you could then do is you could say, when I have a sign of when I know my direction, right? Which I'm assuming, with, if nothing else, you can read the chart, or else maybe you have a momentum indicator that you can see when the market is moving aggressively or not. Let me just move to an area that I don't have a lot of lines in here. Let me yeah. So if you have an area where you're like, okay, I know now that we're making higher highs and higher lows, right, at this point. So you're like, okay, I'm aggressive, or we're bullish, I mean. And then if you can also see on the bottom here, we've got accumulated volume in each wave. And so when the green waves are generally bigger than the gray waves, or if you have a big gray wave, if the little dash that comes after it is broken by a green wave, which happens here, if there was any question whatsoever of whether or not you had a bullish environment, that's identified there. But it should have been pretty clear earlier on, because like, here, look at that same concept here. Here's the gray dash that's related to this one, right? And then we had a lower low on price, right, with very weak volume. Notice what happens right here. We break over that weak low, that weak volume low, with more volume to the upside, right? And price hasn't even done shit, right? It's still going down. So I'm not suggesting you buy that, but I'm suggesting you stop selling it. And now we can say, okay, if they hold this, or if this low is protected, all I need is a sign of aggression, and then a sign that sellers are giving up. Because what am I really looking for, right? I'm looking for a situation here where I have an aggressive delta and some speed and some sellers no longer showing any interest, right? Only green numbers, no red numbers, right? So I need a sign of aggression. So that would be a star to the upside, an orange bar to the upside, a diamond to the upside on my algo. It can be, you can make it all stars if you want. I just like to know what they mean, so I have them separated, but you don't have to. And then you would look for a pink bar indicating sellers are giving up. The other thing you could look for, if you want to make it simpler than that, But you get a little bit of a weaker entry. Is you could look for triangles, the white triangles that are lined up with a pink bar. What you generally want to do is see one and then buy a pullback. So let's see if we get either one of those. So there's our pink bar, but that star was going in the wrong direction. So we need it to come after a star or a green bar going in the up direction, right? If they have a wick on the top, they're down bars. So that's a sell bar, aggressively selling. There we go. So diamond, a box too is strong, and then a star. So all three of those things are just three different ways to measure aggression. You could literally just have one of them. You just wouldn't have as many trades. But three different ways, three different criteria for saying, hey, there's a lot of aggressive buyers in there. If it's followed by a pink bar, especially a pink bar with a triangle, I'm good to go. Otherwise, any pullback can be bought. Okay, no triangle, no pink bar. It's in fact a purple bar. Wait, right? Okay, turn it on, nothing. There we go. So we have two of the three aggressive signals. Great. If we have a pink bar that follows this, particularly if it has a triangle, I can probably just get long. Otherwise, if I want to wait for the second one, the second pink bar, I can. So we get no pink bar, just a triangle. We need to wait. Okay, there's our pink bar, right? Now, do we want to buy this? You have to ask yourself, do I want to be a buyer at 39.68.50? Where does my stop have to be? 39.60, right? It's not horrible, but it's pretty significant. That's a pretty big stop for me in ES. So I'd usually wait for a pullback, but I do identify that this is starting to look bullish, right? I'd love if they give me a pullback here. I didn't actually look and see if I did get a pullback. Let's see if I do. Okay, there's our pullback. Okay, star, right? And so now I didn't get the pullback I wanted. Should I just give up on the trade? No, because I've still got aggressive volume, right? No question. There's more buyers and sellers here. Notice sellers are very weak. So I just have to start over the process. So if I didn't get aggressive and take this one because I didn't want the 8-point stop, which is probably what I would have done, I'd say, okay, well, I did get my pink bars. So if this one can produce a triangle and a pink bar on the same bar, I'll go ahead and take the aggressive trade. There it is. So white triangle associated with the pink bar. I should at least get 3 points here. Now, the only trouble is we do have some resistance, but I expect we're at least going to go to this one. And so I'm estimating it's maybe 4 points, but that's what I'd be looking for. And I don't know if it's going to happen right away, but my stop is going to go underneath this low. And if it's taken, I have to reevaluate. So let's see what happens. I actually don't know what happens here. I could have picked a poor example. It might actually stop. Sometimes they do. Okay, that one stops. No problem, right? Lose maybe 5 points. So that one didn't work, but we're looking for something similar. Now we're asking ourselves, are we still bullish? Well, do we have bullish aggression? We don't. Or bullish volume? We do not. Right? So now I want to chill for a second. I don't want to keep buying it. Doesn't mean it can't lift, but that pattern will work better if buyers are in control. I don't want to take that pattern if it's balanced or bearish. Now, I might have identified, had I been paying more attention to the other indicators, that there was some weakness here, but I'm not even going to, let's just call it a stop because stops happen. Okay, we do get the signal here. Star, pink bar, triangle. So it may lift, right? And we may have just been too conservative because we got our pullback. In fact, the fact that this lines up beautifully with our original pink bar and they came back at it with a star probably means this works as a continuation, right? But I would have to check on the smaller time frame and see if we have an aggressive buy bar. There's one more step to this if you want to be specific, and that's that if you go to a smaller time frame and do the volume analysis, you can get some extra trades by using the smaller time frame to give you a little hint. So this is the 4 tick, and that was the 6 tick. So now if I can get a green bar that crosses this level, I could say that buyers are in control. I don't know if it happens. It does right there. So now here, we're too high to enter on this bar that we wanted. So we have to wait for the next signal. Okay, so, but we know now on the smaller time frame, buyers are in control. So we can once again look for aggression followed by pink bar with a triangle. So there is an arrow. That's a sign of momentum shift or aggression. You could just buy that since we know that buyers are in control in the 4 tick, and that's a trap back in. So it's technically, and it's right at the location we want. You could just buy this. But if you want to be a little bit conservative and wait for that continuation signal, what you want is that pink bar with a triangle. And we get it. Another way to think about this is we've had a pink bar with a triangle. That pink bar with a triangle got a pullback, and we've yet made another one in spite of the fact that sellers are trying to take back the market, just like we saw on some of the this one where we had a pullback that gets defended, right? With with the indicator. So that's basically what's happening here. If you look, this should be the exact same spot. Whoops. So here, again, I'm making this more complicated than it needs to be. But what you'll see is if you waited, I believe this is the same. Let me just double check that. Yeah. If you waited here, right, if we were looking at the exact same information here, what did you get? Right there. You got a higher high, right? Higher high. And then you got your zero line to hold as support, right? So you could use the indicator to find it too. That's okay. Or you can just wait for the pattern. I want either a triangle with a pink star to get taken out and come back with another triangle with a pink did I say star? A triangle with a pink bar, get taken out, and then print another triangle with a pink bar. Or wait for a star followed by a pink bar if you want to be more aggressive, or an arrow followed by a pink bar with a triangle, and just take it, as long as you've got bullish indicators, right? And so does this one work? It does. So you make back the 5 points or whatever that you lost in the other one, and you make more. Now look, we get another sign of aggression followed by a pink bar, so, and with a triangle, right? So we should expect this to continue. If it does not continue, if instead we take out a previous support, we should probably exit the trade, because this pattern is a sign of like severe aggression. So we don't know if it's going to go further, but if you want to know, should I hold this trade or not, in the same way as you'd look here and say, up at the top here, you'd say, wow, finished auction up here. They flipped, and now all the volume's on the downside, and there wasn't any volume up here. What would you be thinking there? I'd be thinking, wow, I thought this was squeezing, and they didn't need any volume, and now sellers suddenly show up. If this low gets taken out, I don't really want to be long anymore. Well, look at this indicator. What did it do? It got onto the zero line, it rejected it, and it made a divergent low, or divergent high, and then went lower, right? Now, it's bullish, so you don't want to be immediately short selling. But if you wanted to get rid of your some contracts there, I think that makes sense, right? As soon as this bar comes in, pink bar followed by star at resistance, it's usually going to rotate. So let's see what happens. It tries to rotate lower, and they give us, whoops, I went too far. They give us another bullish pattern. Star with an arrow followed by a triangle with a pink bar, right? So confirmation that we are going higher, especially after that attempt to pull them back. They got under the low, finished auction with a zero over here, and continue, right? The indicator made a divergent high, a hidden divergent high, but it's bullish on the higher time frame, so it doesn't produce much of a sell, and instead buyers don't even need that much aggression, and price just lifts, right? And that's exactly what we see here until that stops, right? So you could now we have pink bar followed by orange bar. That's usually a sign of sellers trying to push the market lower, but we shouldn't be bearish until a bull trade fails, in my opinion. So it could pull back, but as long as they keep getting this combo where aggressive buyer, pink bar with the triangle, I'm going to assume it's going to keep going. Eventually one of those is going to fail, but see, aggressive bar, pink bar with a triangle, it's probably going higher. And you can literally do this like all day long. And yes, eventually you will be wrong, right? Eventually one of them will fail. Okay, that one did not get a pink bar. They're putting 2 bars of aggression in, and that's potentially a problem. So if bears now come in, and yeah, that's probably a short. I might be totally wrong. Oh, there's the long. See it? Diamond, star, pink. Flip. In fact, it happened here. I didn't see it. Green bar, diamond, pink with a triangle. Right there. You know that sell's going to fail. And then there's the second one. So if you weren't sure, get the fuck out of shorts. Get long instead. Yeah. So they tried again. Now they did have one weird thing here, right? Those colors, and those were reversed, right? The pink bar should be coming after, not at the back. It should be with the triangle, and it was over here. So if they can push the market under this, sellers will take a push. We'll get an extension. But as long as buyers keep on having that, see, there's another one. No pink bar. They're having to work a little bit harder here than you'd expect. It doesn't mean they have to lose, but now this pink bar star has a lot more relevance. They got to push it though, and they just can't do it. Buyers just completely annihilate. Okay, let's see if they finally take it here. They took some liquidity. Diamond pink bar. It's going higher. Star no pink bar. Let's see if so now we can say. If they can break down under this and put some volume under there, it's done. So now they got diamond purple bar. That's bearish, right? That combo is bearish. They take it. Do they take it with volume? They do. So at this point, I would expect that we come back and check on some of these apexes. How far we get, I don't know. Oh wow, they absorbed it right here, and they got. So I bet here, if you remember, we can look at the volume, right? We want buyers to be in control. If you look here on the four-tick, that happened right here, right? So all of a sudden, once again, we should be looking for buyers if this is followed by a pink bar. Okay, we get out of our short and we go long. Yeah, I don't know, you guys. It's is it 100% no? Right? Like, obviously, everything has stops, but once you know what to look for, I ask myself, would I rather just look for stars followed by pink bars, or do I want to learn how to read the DOM and understand all these numbers and build all these systems and think about what's bearish and what's bullish divergence, all that? Like, which one do you want? Like, do you just want to wait for the colors to tell you what to do, or do you want to figure it out on your own? I find if I'm trading with size, I need all that analysis done for me by the system. I don't want to have to think about at this point. Wait, is this what do I do here? I've got an aggressive bar with an aggressive sign and a pink bar. What do I do now? Like, no, is it an aggressive bar followed by a pink bar and a triangle up? Are buyers in control? Yes, it's just a buy, right? I don't have to, because if I look at that here, it might be a little ambiguous. It's like, whew, well, we're looking. It looks kind of like, what if this is distributing, right? We're not spending a whole lot of time above the zero line. Okay, we did hold it here. It's probably a buy. It's probably okay. It looks like a buy, right? But I might doubt myself when I start to see that there's no volume up here. And when is it, because I mean, look what happened back here when there was no volume up here. It pulled back. Look what happened when it had no volume. It pulled back. Am I going to maybe like not be able to take a big trade here because I'd be nervous about that? Yeah, I'm probably not going to take as many contracts because I'm going to overanalyze all that information, right? And then when they pull it back on me, might I actually like give up on my trade because I'm like, I don't think this is working. I've done it, right? I'll like sell it right there. I'm like, nope, I'm not gonna like let this take me. Now sometimes that works out to your advantage, but a lot of times it just keeps going, right? And you just overanalyzed all this extra information when literally all you needed to do is know that the pattern is star followed by pink bar, buy until that low gets taken, or until they stop putting in all this bullish aggression, right? So eventually they're going to put in a weak up rotation. See this super weak up rotation? So now it's going to consolidate most likely. Or they'll just squeeze. There, weak, see this weakness? It's nothing like this one was, yet we made a higher high. So now we probably should expect some sort of consolidation, if not a severe. Oh, that's where we are right now. So this is going to be balanced. And then see right here. So see, this is the last star pink bar, right? That would be your last entry. That one, they came under it and ripped again, right? So if we can get volume to develop down here, it'll come back and test some of the other times when that happened, that same pattern. It'll come to this one.
it'll come to this one here. It'll come to this one here. And it'll keep checking them until they find buyers there. Because they had buyers there before that were followed up by just immediate buying and sellers giving up. And so now that sellers are no longer giving up, see how now the sellers have more volume than the buyers from rotation to rotation? The sellers now have control of the market for the moment, and they're going to push as through as many of those previous aggressive moves as they can. And we shouldn't be buying until we see them fail. And so, like I said, you can understand all that, and that'll help. Otherwise, you can just learn to trade a pattern of colors, and you don't have to know shit. Okay, you got to know a little bit, but otherwise you're not going to have any confidence. But the truth is, if all this is really complicated, it's even more reason to figure out either find a way to build a systematic trading system or find one that's already been built. And I just figured, why recreate the wheel, and decided to get this one instead. So, like I said, if you want to learn more about the algo, you can always contact my coach, Simon, at trade_wordperform@gmail.com. It is super late here, and I got to work in the morning, so I got to go. But hopefully this was at least somewhat interesting or educational. Happy to answer questions you guys might have on Twitter. You can reach me at redben.